All right, so what we're going to do today is we're going to recap some trades that I'm in. I'm going to show you why it's important that you should always set your profit targets where you think the price is actually likely to go. You shouldn't really worry about too many other metrics when deciding where to place a profit target. You should simply ask yourself, do I think this is actually likely to happen? So let's go ahead and have a look right here. We're going to go, whenever I set profit targets, generally they're at the next zones, or if I'm in a trend, like if I buy in an uptrend price, I just set the profit target at a higher high. So for example, when we're taking into account this Australian dollar Japanese yen trade, I took this trade yesterday. I called a buy right here. Now, why did I call a buy? Price is in an uptrend. It had pulled back, was still making higher lows. I just thought it was going to go make a higher high. So how did the trade actually look? I called it out here. This is the close friends group where I call out every single trade I take. So it was yesterday right here, AED-JPY. I think she's going to be going up, continuing the uptrend, so I'm long. I plan to add if the next support zones are met. So in case it went back down against me, I had a way to recover the loss and get out of the trade. But if it just made a higher high, my profit target was right there. So that ended up working out. I got an alert this morning saying it hit the profit target. So that was that. Another trade that actually hit the profit target today was GBP-AUD. Now, whenever we're looking at GBP-AUD, I was previously long on this. So I was long up here, thinking that price would go up. And I closed this at an $800 loss yesterday, and then I reversed my position, thinking that price would no longer go up, but would in fact start going down. So what I opted to do is reverse my position at almost, it was like 1.5 times of a multiplier of the previous position. So that way, if it went down, I just had a small move to the next support zone, which was right here, at which point I could recover most of the loss. So I recovered almost all the loss just from this one trade. Why did I short? I shorted just because I thought it would go down. Price came here. It had multiple times to bounce up and go up. All these times failed, and we just started making lower highs. So I ended up selling right here as price was starting to break through the lows. And then it looks like it pulled back a little bit overnight, then came back this morning to hit the profit target. So, and that was the, here it is, this trade right here. GBP-AUD. There was a hitting the profit target. So today it's up. I'm up $1,300 today. In an open P&L, it's minus whatever this is, 100, so $200 right now. Here's the current trades that I'm in. Here's what I'm looking for today. USD-JPY. I'm thinking that price will go up because we're in an uptrend. So I bought. It's had a pullback. I still think it's going to go up, so I'm still holding this one. CAD-JPY as well, the same idea. We're in uptrends on most of the JPY pairs. It had broken above, came back to retest the support resistance zone. I think it's going to go up. AUD-USD, this is a trade that's not working. However, I have a management plan to recover this. I think price is going to continue to go up. I'll probably be managing this trade here shortly. And then if price bounces at this zone, then I'll still make a net profit. Good bounce here at the resistance zone. I've went short. I thought price was going to go down right here, so I went short at this zone. It looks like it went deep into the zone, pulled back a little bit to my entry, and then just bounced up. So it is what it is. That's the only trade really not working right now. We also have a Euro AUD trade. I think that price is going to continue lower right here. I've already covered why I took this trade. This is just kind of an update. You can watch the last video if you want to see why I took this trade, the full analysis in there. So another important thing just to retouch on this is whenever you're actually going about defining where you're going to enter a trade at, it's generally a good idea to try to make sure that when you're entering a trade, you're only entering trades where you think that at the moment you enter, price is likely to move into profit. Bring the camera down a little bit just so you can get a little bit closer. So whenever you're actually entering a trade and you're setting your profit target as well, you don't want to put it somewhere ridiculous where price would have to break through a lot of zones, or like literally reverse an entire trend. Or if you are buying, say, in an uptrend, you don't want to set it so freaking far that like the average like true range of that pair would have to be exceeded by like 3 or 4 times just to get to your profit target. Put it somewhere logical, put it somewhere reasonable, put it somewhere where it's going to get hit most of the time. As far as your invalidations, I've generally been a fan of, even if you're just using a 1-to-1 risk-reward ratio trade to get started and you're just letting things play out, I would only put the stop loss where I think it is very unlikely to be hit. And then even on top of that, 99% of the time I don't actually have a stop loss hit. I'm able to manage the trade and get out of it before the stop loss hits. A lot of this comes down to experience, intuition, discretion for how to manage a trade that's not working. There's multiple ways you can go about it. You can use hedging. You can close the trade at a loss. You can reverse your position at slightly bigger size if you think it's going to go the other way. You can dollar cost average in. You can use like a grid recovery system to be able to get out of trades and just kind of scale in. Then when it pulls back, you can get out. There's a lot of creative ways that you can go about trading to make profits, and it doesn't have to be something as bone dry as like, let's just buy on the moving average with a 1-to-3 risk reward ratio, something that completely lacks context. As you get more experience trading, you realize it is very simple, but a lot of the decisions that you end up making in trading is the fact that you have to actually let your feelings about what you think is going to happen dictate what you do. Using gut, using intuition, using grit, feel, kind of like being able to get through all that, that matters a lot, because it's like any other skill set in life, right? Like, you don't learn how to ride a bike just by me sitting here on a whiteboard and teaching you. You only learn through actual experience. So that's why I think it's so important to apply the same logic to trading. Trading is not this thing where you're like instantly going to be great overnight. Most people are going to fail at trading. Most people are going to lose money. Trading is risky. Trading is hard. Trading is difficult. It's like any other thing that you could perform in life at a high skill set. But when it comes to trading, I think it's best to do what's logical. And that's why I think it's logical to set profit targets where you think they're very reasonably likely to be hit, and set invalidations or stop loss areas where you think they're very unlikely to be hit. When you're getting into a trade, make sure you're going into it thinking that, okay, if I enter this, I think this is likely to move into profit literally right now. And if it starts not doing that, you can manage the trade very quickly. I don't think it's the best to enter trades where you're like, it could go up now, but it also could do this, or it also could do that, so I'll just like kind of wait for a while and see. I think it's better to just wait for whatever evidence or confirmation or whatever you see to literally dictate to the point where you're like, if I enter this should really kind of start going to the target immediately. Otherwise, I should probably do something. I should probably manage it. I should probably get out of it. I should probably close it. I should probably hedge. I should probably dollar cost average in at the next area where I've planned to, and using a position size that's reasonable and not too large. That way you can withstand a drawdown if it goes against you. A bunch of cool ways to do this. Just want to give this video so that way you could have a little bit of context for where to put your profit targets and where to put your entries and where to put your stop losses at. See you in the next one.